Welcome to Trading Lounge and the Commodity Futures Report for Monday, September the 26th. Starting with the US 10-year yields here, and this is a monthly chart. And it's a long-term chart, so the old lows back from 1942 is not on this chart though. Coming up to the 80s, if you're old enough, you'll remember interest rates, up at 20% and so on. So what I'm looking at the moment is that off the low, we're getting 5 waves off the low here, and we'll look at that in a moment. So these 5 waves here, you can see is 1, 2, and then we've got 3, 4, 5. So it should take us up to about 5%. So 5 waves up to 5%. Now, because we're getting 5 waves in the opposite direction of the trend being down, because we're getting 5 waves in the other direction to the upside, that means that we'll have a 3-wave correction. How far that pulls back is yet to be defined. We can always look at 50, 60% and all that sort of stuff, but may not pull that far back. Especially when it's going to be sitting around the 5 area here, which is to me, which is a major trading level, and it will be a sticky number, and the next number up past that for a major trading level is 8, and then 10 at that point. 1, 2, and 3 are also major levels, and medium levels are always halfway between major levels. But basically 5 waves up to the 5%, some sort of retracement in 3 waves should be simple and sharp and quick-lived, and then we'll see another 5 waves up that can either stretch us up to the 8 or 10 depending. If it's a 3rd wave, if we look at this as wave 1, because we get 5 here, we're going to get another 5. That much I can tell you, right? Beyond that, we could just have those 5 waves to the 8% and then come back down and do something in that area. But if we get 1 and 2, which we will, 1, 2, and 3 up to 5%, so we can just put this here at 5%. So if we come back in a corrective pattern here to make wave 4 and get wave 5 up here, that means we'll have a larger 5 waves off the low. So 1, 2, 3, 4, 5. So a larger fractal. So because we got 5 waves up, if we get 5 waves, I don't know if we will, but if we get wave 4 here and a wave 5, and we get those 5 waves up, that will give us 3 waves back again, and then another 5 waves up. So that's going to be breaching these old highs up here. Now, will that happen or not? I have no idea. But all I can say, if we get 5 here, we're going to have 5 here. Now, these 2 lots of 5 here may turn into a wave 4 and 5 into an impulse wave to the upside. If that is the case, then we're going to be moving up here. So I think the community, the financial community, understand that, 5, nobody likes to go too far out ahead, and, obviously the people that talk the loudest, talk the highest, and I don't really want to be one of those, but the general consensus is, getting to 5% here is pretty much on the cards. So, I find economists take one step at a time. They'll never tell you that we go here. That's a good thing about Elliott. But if we get 5 here, we're going to get another 5 over here. And I think that's really important for people who've got mortgages and things like that. It just shows, where the real world is going to be, at that point. So, yeah, but I just find this larger 5-wave move here very scary indeed. But who knows? Maybe I'm just fearful over nothing, Anyway, that's that. We could go to the daily chart and just check on this little count here, which is working and unfolding pretty nicely, must say. So we're looking at all of this as wave 1 and 2. I've done all my homework on that, so I'm not in the guessing game on that. And then we've got 1 and 2 here, and 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and we've been talking about the 4th and the 5th going up here for the last month or so at least. So we're going up for wave 5. I haven't counted it up here as yet. I haven't pulled it apart. I just haven't had time. But anyway, as mentioned, we should be at the 4%. We should see some sort of consolidation around that area there. Yeah, everything looks pretty good. The proportions of everything look pretty good. It is possible for this wave 4 here to pull back to the previous wave 4. So we can either go like that, or we can look at the 38.2% retracement level. Did I grab that tool there? Okay, so I'll take it just above. I'll take it to 420 there roughly, because it's kind of where it's going to be at anyway, in the 434 to 430 range. That leaves the 38.2% retracement level back at the 3% roughly. So I think that 330 is about right. So 330, yeah, maybe not even that. I mean, this old top could come into play as well in that instance, but we haven't had a really good consolidation there. We'll just wait for this to play out, and if it comes back and creates you know, a fair bit of volume turnover at some particular price point like 350, then we'll look at it. But yeah, I think I can push it to 330 conservatively to the downside and be safe about that. But it could certainly be at 50, could also be at 65 as well, the lower end of group 2 of 4. But yeah, there are our 5 waves to the upside, so I don't really see a problem with that. And how far this pulls back, this other move here, I'm not sure about that. I'm just going to put that into primary degree at this point. So, you know, I shouldn't really label it wave 1 or 2, but so I'll just keep it out of the way a little bit for the time being. But so it could be an A wave up here and a B wave here and a C wave going up to, you know, 8% or whatever it goes up to at that point. But that's where it is. It's all, you know, it's a beautiful picture, and that's sort of where we're at with that. So if the yields are going to push up to here and then have a correction, I mean, obviously you know, the Feds are going to see each month, they're going to see the S&P 500 fallen out of bed, you know, and they're going to be concerned about it at some point. So they'll continue to raise rates for the short term, but as they see the S&P head back towards 3,000, then they will probably ease up rates for a little bit, and this is while this will come back here in some type of correction, you know. But then they'll probably realize that that's not going to change anything, so so they'll be back on the case again, pushing it back up here. So that will take, you know, this is all going to push the dollar up, isn't it, at this point? So with the US dollar here, we can come back to this one in a moment. Let's just go to the monthly chart since we're looking at the big kahunas. So from the low here, we can look at it as wave 1 here and 2 here, and then 1, 2, 3, 4, 5 for the third wave here, A, B, C for the fourth, and up for the fifth here. So 1, 2, 3, 4, 5. Now the problem with that is that wave 4 here does overlap wave 1 a little bit. It is a bit of a no-no at this degree of structure. So if I had to play by the rules and relabel this, then I would have to label it wave 1 here, a larger wave 1, and then back for 2, and then this one up here as wave 1 and back for wave 2. So a bigger 1 and 2 and 1 and 2. So we could be going into a third wave here because it looks pretty powerful, doesn't it? So I will go conservatively with this and just say that we'll count it as 1 and 2 and 3 and 4 and 5. But just to let you know that this is quite strong for a fifth wave. It's okay. I mean, I can see that we've got wave 1 here. That's its length here. This next leg here, you can see that it's actually, the range of it's much bigger than this one here, isn't it? So the market is expanding to the upside. The ranges are expanding to the upside. So this is an expanding market. So we can also see this expanding. So I can count from here to up here. We'll get 5 waves up here, and we can leave it at that point, and we'll see what we get after that. So this is 115. This is a CFD product, so it uses the power of 10 so a little bit differently. So if the US folks don't understand that, because you don't have CFDs, contracts of difference. But yeah, so when we count these 5 waves up here, I'll count them conservatively, and when they're finished, if I get another high above my thing, well, then I'll extend it up further, and we can look at this as a 3rd wave to the upside. But yeah, so it's just always step by step. But look, if the yields are going to be stronger, then wouldn't it make the US dollar stronger as well? Wouldn't we see the US dollar further up? So we'll see how this plays out here. Yeah, this top here, I suggest we'll get a little bit of a top like this. We'll get the arrival, the reaction, the first high above the level. So we will be looking for it being bullish after that. So we'll get the arrival where we are now, some sort of smaller reaction, the first high above the level, then a correction that can pull back to, anyway, down here somewhere. So we'll look at that. But that's how we'll know to go long anyway. We'll know where to go long. So on the 2K tick here, I think we are. So just in this top here, conservatively, if I look at this as wave 4, I can look at this as wave 1 and 2 and 3 and 4 here, and then go up for then go up for wave 5. So wave 5 up here, up 5 up here of 5. I would count that up as 1 and 2 as I have been doing, and then 1 and 2 here, 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and then the extension in the 5th wave, which would be 1 and 2, and 1, 2, 3, 4, 5 for the 3rd, 4th and 5th here for the 3rd, pulling back for the 4th, some sort of ABC coming back to 38.2% retracement level, or sitting on this trend line or something like that, and then a push to the upside here, and that would finish that off. But you know, when I come back here, you know, to look at this as the little wave 1 and 2 in here, I don't really sort of get that too much, you know. I would rather, as I've mentioned before, to put wave 1 up here and look at this as wave 2. So instead of having 3 and 4 here, having 1 and 2 here, and looking at this as a 3rd wave to the upside. But like I said, what I need to do is I just need to count all my little curds and ways, and then when I get to the top here and it's all finished, I just need to see if we get what we get here. We're going to get a pattern like this anyway, and if we see this as a corrective pattern, well, then we can continue to go long there at that point, because you know, this is what we're looking for with the pound and the euro. So we're going from wave 4 up to wave 5 here. So in the inverse of that, this is the euro here. So we've got wave 4 here, we've got wave 1, 2 here, and we're going down for 3, 4, 5 here. And I think the pound is a bit better of a count, which I'd like to have a look at. So with the pound here, from its wave 4 here, we can count down as 1, 2, 3, 4, 5 for 1 here and 2 here. Nice strong 3rd wave down here, looking for some sort of 4th wave to pull back, and then down for a 5th wave to get to this point here. But obviously we could look at this as a nice 3rd wave down, but at the same time, I can only move on the, I can speculate, but I can only move on the evidence. So once this leg is finished, anything beyond that down here at this parity where it will be, then I'll extend it down further. But I just have to take one step at a time with these things. So, but anyway, that's where that is. Rightio. So over to, leaving the currencies, over to the gold market. So this is GDX here, and this is the way that US spot gold's going as well. So we can look at this here as a corrective wave, as we've done, and then down from wave 4 down to wave 5. So we're looking at 1 and 2, and then 1 and 2, and I could also label this here as 1 and 2 in here as well, just to get things into perspective a little bit more. And then we're going down for 3, 4, 5 here. So, and this will be 1 and 2 in here as well, and 3, 4, 5. So going down for the 3rd wave, the 4th wave, the 5th wave for the 3rd, then the 4th, and then the 5th. So look, it's not very far from the stock market itself, this particular count coming down here for this, you know. But this is pretty much what you can expect for US spot gold, and probably even silver, and probably copper, uranium, lithium, all of those. So let's move along a little bit. So US spot gold here. So just taking it chilled from wave 3 and 4 here, and then looking at this as wave 1 and 2, and then 1 and 2 in here, and then 1 and 2. So just sort of, yeah, just, it's got to get, I mean, the 1650, you probably don't think much of it, but, you know, we have come down, bounced off it, and, you know, we'll need to retest it, but we're heading down. So, yeah, still further to come down in this market. So we should be around the 15 or somewhere down here the time all that sort of finishes off. Now the silver market, we've been looking at this as a possible low in here and counting this as 1, 2, 3, 4, 5. Not a very nice fourth wave, but everything kind of fits together okay. So we've been looking for wave 1, and we're looking at this as an ABC pattern here for wave 2. That would be about the right size, but this size over here, I can still leave wave 1 here, and I could look at this as an A wave here, B wave here, and a C wave here for wave 2. But it's getting a little bit big now compared to this leg here, so we'll probably need to look at this as more of a bearish picture now, and to come down into wave 5, which would make all of this leg here wave 1, going back for wave 2, and then coming down further through here. We're at the 50-60% retracement level. I could say to you, if it comes down to the 1800, which will have a bounce, if it comes down to there, you can pretty much say goodbye to silver at this point, and we'll look at this wave 4 and wave 1 here and 2 here, and then down for wave 1 and back for wave 2 and so on, and build it down further. So that's what it's looking like. So looking at this as 1 and 2 here, and then building down here. So we'll be down between the 1650, the 16 and 15. Bit sad, but there we go. So copper was also a little bit bullish on as well, but as I mentioned, I could never figure out how we should count this, but it always sort of irked me because this was obviously a nice third wave here, but I know that commodities can have extensions in the fifth wave. So we had this wave 4 over here, looking as a possible wave 1 and 2 here, as an A and a B and a C, but we're pushing too far. We breached here now, so we're going to be putting wave 4 over here, and we'll be looking at this moving down further now for this. So I'll need to do a bit of work on that, but anyway, we'll be down here somewhere for this. So 1 and 2, and the third wave probably. Third waves normally come down to the previous low here, so that's where we can pretty much expect that there as a bounce off those low, off that 30,000 there, CFD product, and then down further for that. This will be the course. And this will be the course for most of the other metals as well. So let's just quickly go through those. Nickel, we've been looking at it in 2 ways. So considering a low in here as wave 1 and 2, and then 5 waves up, 1, 2, 3, 4, and 5 here. So we can put that in there as wave 1. But the thing I never liked about this was this wave 2 here, because it was kind of really big compared to wave 1, so it looked like more like a B wave to go up here, you know. So looking, I think we might have even had it labeled like this once, an A and a B and a C wave up, an A and a B and a C wave up here. So that C can go where that wave 1 is here. So we can look at this. This was our, you know, we're looking for a classic trading level pattern, the arrival, the reaction, the first high above the level. So we can put that there. We can go long above that. That's not a problem. If that gets breached, we go long. It's simple as that. But otherwise, we'll be looking at this probably coming down here and then coming back up and then coming down here, that sort of thing, you know. But we'll see. We'll see. Anyway, we've had to wait for this setup. We've had to wait for the 5 waves to finish, so we've done all the right things at the right time, and now it could pull back to the 50-60% retracement level, which is here. So we'll just observe it, you know. If you want to short it, you just need to leave the stop out of the way. So I can't really give you a short at this point, but this would be the A wave, the B wave, and 1, 2, 3. It'd be down here, you know. We're coming into off 20,000 major trading level 2. We've got 1, 2, and 3, which is minor group 1. So if the number 2 here becomes the retested resistance here, then you can be assured that we'll be going down further at that point. So it can come to, this is a very simple ABC, an A wave, a B wave, and a C wave down here. There'll be another little move down for that wave 2, but anything below that, then we'll need to start looking at, I'll have to start looking at this as wave 1 and coming back for wave 2 on the flip side here. Well, anyway, let's see if we get 5 waves here. I mean, we could even get 5 waves here and then move up here and then come back and then move up for the wave 2. So there's a few things we need to work out, but what I can say, there's no need to rush to do anything. You know, we've been patiently waiting. I think we even had a trade up here. We get out of the level and wait for the next setup, but yeah, we'll see. We'll see how the cookie crumbles. Lithium. So we know lithium stocks are correcting. So let's just, there is a little bit of an issue with, I'm just going to go to the Australian section here, and down the bottom here we've got SQM, which is traded on the New York desk, a Chilean stock, and there its constituents there. Pays a reasonable dividend, this one, so if you wanted to stay in it. So we were just looking for it to do its thing here. We understood that it's just not ready. We can buy new highs, but basically we're just waiting for this to play out here. So this is correcting. The other one that's traded in the US is this one here, and it's arrived at the level here. It doesn't have a trade set up here for us. And then we're looking at the Australian stocks here. So what we were looking for here was from wave 4 here, looking up as 1, 2, 3, 4, 5 for 1, coming back for wave 2. So we're really just getting our first little 5 waves in this structure here. And then the ABC pattern looks like it's going to come a bit deeper. But what we have to be a bit careful about with all of these is that they could, you know, with down here we can have 1 and 2 here, and 3 and 4. So I'm thinking that there is another run to the upside, but we have to be careful that we might need to put this wave 5 in the top here. But that's, in some cases that's the case, and in some of the cases not. Like the next one that we look at won't be the case, because this has got 5 waves up here, and it hasn't taken out that top. Do you know what I mean? So there's a good case that we can have our ABC pattern for wave 2 here and then go up. But there are a lot of the other stocks have taken out their tops here, so they can look a little bit toppy in the scheme of things. You know, they've already travelled a long way, and this correction here is a sign of, you know, it's a crack in the trend. So we do need to be careful. It's not like we're at the bottom of the trend. This is yeah. Anyway, I won't go into all of them, but. We're just basically, what I'm trying to say is we're just monitoring the possible, you know, we've waited for them to top and turn, and we're just waiting for an ABC pattern to come back, something that needs to mature so I can recognize it and we can develop a strategy of it. But because we're quite close to the tops, we may even get a bigger, you know, a bigger move down, but we'll just see how we go anyway. But for lithium in the short term here, we need to come down here further, you know. It's possible to count this up as 5 waves, but we could also look at it as an A wave and a B wave and a C wave up here for the B wave and down. You know, like I said before, if we got support on 80, we'd go long. But we could see the stocks needed to correct. So these are ETFs, so they'll be made up of, you know, of those stocks. So they're all correcting. So we'll just watch it for a while. You know, we don't have an entry in lithium yet. And the same with the uranium as well. We're looking at being positive to the upside here. It never really gave us a nice ABC, so it's an A wave, a B wave. See here we got 1, 2, 3, 4. Well, we could look at that as well. We could look at that as 5 waves, but then we got this move here, which is a bit dodgy. So I'm just looking at an A and a B and a C for the time being before I go into WXYs and that. But the main point here is that it has retraced down quite a way here. So expect it to come down to make new lows in line with the rest of the markets. You know, it'll spend some time retesting the 20 and so on, but it's uranium's coming. They're all coming down while that dollar's pushing up, you know, as well. Okay, over to the energy sector. So crude oil and natural gas and so on. Now, we've been using this ETF here to get a bit of an idea of what the market is. So we were looking at this in 2 ways. And it's good really because we had 2 counts on it and it kept us safe. It kept us safe for crude oil and Exxon Mobil as well, because that's one of the biggest constituents in here. So we're looking this down here as a possible wave 4 here. And then if that was the case, we'd look at this as 1 and 2 here, and then 1 up here, and then an A and a B and a C for wave 2 here. Now we could put wave 2 here, but that would be stretching a bit. We've come past, well, we've come down past this low now, so that's useless. So that means that that positive move to the upside's just not on now. So that means that we need to look at this here. We need to remove this wave 1 and 2 here. We don't need that wave 4 there, because we're also looking this up as an A and a B and a C for the B wave up here, and down for the C wave. Now, because we used the trading levels and the basic picture there, we could go long above here, and then we could go long above here, and then we could get another opportunity to build on over here if we got things right. But they never eventuated. So we didn't get the trade, but we didn't get sucked into the trade either. Do you know what I mean? We did all the right things. We didn't catch the short trade either, which is well, you can't do everything, but at least it kept us safe. So what we're looking at now is we're looking at, can I borrow one of these? Do I need to count that over there anymore? No. So we can look at this as 1 here and 2 here, just to give you a bit of an idea. I don't know if that, it doesn't look finished yet, that move 4 and 5 over here. So that will bring us into wave 3. And as I say, wave 3 normally at the tops or the previous bottoms, you know. So and then wave 4 here, and then wave 5 down here. So that's the gist of it there. And then we can look at wave 1 being over here and wave 2 building at that side. Okay, so that's the energy. So any stocks that you're looking at, so that brings us over to Exxon Mobil, where we were tracking both counts. So we were looking at this here as wave 4 down here that we don't need anymore, so we can delete that. And that wave 4 would have been looking at wave 1 over here. We don't need that. That could go over here. And we're also looking at it as an A wave, a B wave, and a C wave up here for that. So that's what we'll be looking at that for. So I'm going to put that as wave 1 there. I'm just going to remove these guys out the way. And we can put wave 2 there. And that wave C can go there. And wave B can go there. So now I need to start working this out here. So I'll work that out. It looks just a little bit messy, but I'll get to it later. But what I can tell you is we're in that 3rd wave coming down, and there'll be a 4th, and then there'll be a 5th, and then that will make wave 3 down here. So this is going to reflect back into crude, of course, you know, and we did the same thing with crude. So we weren't going to go long on crude unless we had $90 as the support. So there we go. It finally played out to the downside, but like I said, we you know, we never went long. We did all the right things at the right time, so I'm happy about that. And for the folks that came along on that little journey, it just shows it's a good exercise and a good lesson, isn't it, in patience. Alrighty, so we're going to be looking at crude now. So with crude here, This is a monthly chart. We can look at wave 3 over here. We can look at wave 4 here. We can look at this in a couple of different ways. I could look at it as an A wave here, a B wave here, and a C wave down here with 1 and 2 and 3 and 4 and 5 here, but it doesn't count that well here. It counts better as a triangle pattern. So we've looked at it as an A, B, C, D, and E here. We know it's corrective. Now, the other point here, as this wave 4 here, from wave 3 to wave 4 here, we've been looking at this moving up here as wave 1 up here, 1, 2, 3, 4, 5 up here for wave 1. We've been looking at an A and a B and a C correction here for this, and we're looking for it to, well, we were thinking that, well, it could go up at that point. So we're looking for entry points on top of the 90. We just didn't get that. So yeah, it looks like we're going to pull back into the 50-60% retracement level down here. Now, the other thing that sort of, now that we're talking about big bear markets and all the rest of it, it's quite possible to have wave 3 here, okay, and then wave A here, and then from this wave A here, go all the way over here for an A, B, and C wave, where that wave 1 is, for a B wave here. So an A wave here, an A, B, C for the B wave, and down deeper for the C wave here. I'm not saying it's going to go beyond 0, but I'm just saying that we would look for 5 waves down in this point. Now, I don't know if that's the case, which one of these is correct, and that's okay too. So when we go to make a trade, we need to think extra hard, and we need to do all the right things at the right time. So just letting you know that this is, over here. But the good news is, because this is corrective here, I don't know if it's good news, because it's corrective, that means that we'll take this top out at some point. There's a good case for crude oil and inflation to work together. There's a good case that when crude oil comes down, inflation comes down as well. But that's all out of my jurisdiction. So we can go into here. I think, I haven't been into the bigger picture for ages. I'll just have a look at the weekly. It's still there. I think we used to use a 4-hour chart and then a tick chart or something. So, right. So, just on the 4-hour chart here for a moment. Where are we? 2K, 5K, plenty. So we can look at it as wave 1 up here, the A wave, the B wave, and the C wave. So I've rearranged this here. So looking at this as wave 1 here and 2 here, then 1, 2, 3, 4, 5 here for 1 and 2, 1, 2, 3, 4, 5 for the third wave, the ABC for the fourth wave, the fifth wave for the third here, the ABC for the fourth, and then looking at this here as 1 here and 2 here, and 1 and 2 in here, and going down for 3, 4, 5 here for the fifth wave here. So we're going to be, like the metals and XMO and ExxonMobil and that the ETF sector. That's sort of what we're looking at. So we're looking down into the 650 to 7 down here. Now, 8's a very important number, so it hasn't. It's below 8, and and I can see that it needs to come down further, but it hasn't really retested it. And see how it's retested these? It really gave a strong thing here, but we're in more of a bearish consensus at the moment, so maybe it won't hang around here very long. But yeah, let's go to the 100 ticks where we've been working, I think. Maybe it wasn't the 100 ticks. Yes, it was. I can see some action there. So in this case, let's just bring in a little bit more data here. So we've got wave 3 here and wave 4 here, and then we're looking down for wave 1 and 2. Now, we were also looking at this as a possible, an A wave to here, a wave 1 to here, then an A and a B and a C to here. And that was all good. We played that out. And then we could go long above one of these highs here, but also looking to go longer on the medium level here as well. But it just didn't happen, We got left with this 3-wave move here, then an impulse wave down for 1 and 2, and now we're sort of heading lower here for this wave 3 here, and then we'll have wave 4. And I might need to extend it out a little bit further, but you're getting the idea of where we need to be, and what's happening with this. So Yeah, that's where we are for crude. And the last one is it's natural gas. And so in the bigger picture here, we've been working two counts, both bullish really, but just slightly different. So we can look at this as 1 and 2 here, and 3 and 4 and 5 up here. Like I said, you could do this as wave 1, but me being conservative, I'm looking at just the A wave here. You could look at this as wave 2 here. But I'm looking at it as a B wave. You can look at this as wave 1, 2. So I've basically been looking at it as an A and a B and going up for a C wave. And in the C wave up here, there'll be 5 waves. So we've got wave 1, wave 2, wave 3, 4, 5 going up to beyond Jupiter or whatever. This is one count. So wave 1 here and ABC for wave 2. So it's basically sitting in the 50-60%, in the 60%, 61.8% retracement level area there. The other count that I've got is that we look at wave A up here, and then we look at this as an A and a B wave and a C wave coming down here. So we've had this for a while. It's not looking so stupid now, is it? You know. Yeah, there's other bullish counts where we can put wave 1 here and look at this as an A and a B and a C wave, and we're right on the 61. If you do that, we're right on the 61.8% now. So any further move down here, any move past that, as this is an A and a B and a C here, right on that low there, anything below that, and it's probably not a wave 1 and 2 at that point. Okay, so I will explain all of this and we'll count these legs here in detail, but anything below that current low, because I can tell you that we've got 5 waves in, well, I'll have to go in a bit closer, but anyway, the takeaway here is we got wave A here, wave B, wave 1 and wave 2 on this low. We need to push up from that point. The other one here is that we've got wave B over here, and the distance that we took the top out over here will be pretty much the distance we'll need to take the low out over here for a wave C over here. So is it possible to come down into this area through here? That's the situation. So, but let's go in here. Well, let's talk about this in here a little bit. I think that's a nice way to approach this. So I think I did something on the 10K for this one, but it's not much help really. Okay, well, this would be if we looked at wave 1 being up here, for example, and wave 2 being here, that's where it would have to be right now, because I can count 5 waves in here. I can count 5 waves in here. This is a corrective pattern. It's rallied too high for a wave 4. It's rallied from there to there. It's rallied back above 61.8%. So it's not the end of the world. It's okay, I guess. And then we can count 5 waves to this point here. So if we got, based on wave 1 being here, right, just to let you know, if we look at this as an A, B, C pattern here, if we get a move below this low here, then that will negate that pattern. That's one thing, isn't it? You know, you got to start ticking boxes. So on the 5K here, what have we got here? Oh, this is the more bearish pattern. This is the pattern that we've had with wave A being up here, the A wave here, the A, B, C for the B wave, and coming down for the C wave here for wave B over here. So in that case, we can still count this as 1, 2, 3, 4, 5 in here. So that'll make a 3rd wave. We'll go back for the 4th and down for the 5th. So we can get a rally up here. And then it can come down here, and then it can do this and this and this, which would be pretty much in line with crude oil and stuff, you know. So that's, you know, it's becoming, it was a long shot at the beginning when we put this over here, but it's becoming more and more so. It's looking better all the time, that case. So that's a way to count that. So yeah, let's just go in a bit closer. So on the 2K tick, let's get in some more data. Just want to point a few things out. That was my doggy making that burping noise. So so this chart's got a few different counts on it because yeah, it's just an intraday working chart. So I must be working on the 100 tick chart as well. So we can count this here as the wave A, then an A wave here, or the B wave, it doesn't matter. There's 5 waves here. There's 5 waves up here. I've taken all the labeling off here. Maybe it's on the tick chart, but this is the low. That's not the low. So you can't use that as wave 1 up here. But basically wave 1, 2, 3, 4, 5 up here to finish that off nicely. So look, I have to say it does count quite nicely. I mean, you can look at it as an A wave and a B wave and a C wave up here. That's all very doable. It's exactly the same. It's doable. It looks good. So everything sort of fits. And as a little B wave here, we've got 1, 2, 3, 4 and 5 down here. We've got 1, 2, 3, 4, 5 into this low. Just makes a little low below here. So it does make a nice ABC pattern at this point, rather than an A wave, a B wave, and a C wave up here. You know, putting wave 1 over here. It's putting that wave 1 over here. They'll give you a little bit more leg room, but down here, but not much really, because when you look at this low here to here, and because that's where you'd take your 50, 60, you'd take your 61.8%. We're sitting right on that now. And that's the interesting thing of having this wave 1 up here, because this move down here, this counts as wave, this counts 5 waves in here, wave 2, there's 5 waves in here. I was looking for this to come back to 38.2%, but I always know it comes back to the closest largest number. It popped its head up over here, but that's the 61.8% mark from that high to that low here. So, but I'm okay with that wave 4 there. It hasn't really overlapped wave 1 here, so that's all good. So to count that as 1, 2, 3, 4, and 5 down here, we're just going to go into a bit more detail and have a bit of a look at that. So coming down from this top here, you can kind of see the 1 and 2, a nice third wave here, and 4th and 5th. So it makes that nice 1 and 2 here. Then it gets a bit rickety in here, but basically 1, 2, 3, 4, 5 for 1 and 2 here, and 5 waves here for 1 and 2, and 1, 2, 3, 4, 5 for the 3rd, 4th, 5th for the 3rd, the 4th. There's 5 waves in here. There's 5 here. There's 5 in here. This is corrective here. So that's okay. It hasn't overlapped wave 1, so that's okay. So we can label it 1, 2, 3, 4 here, right? And then we come down here and we can go down for wave 1 and 2 here. This is a little bit tricky in here, but there's 5 waves in here. That's 1 and 2 and 3. And this is a triangle in here, an A, B, C, D, E here for 4 and down for 5 to make wave 1 here. And then we can look at this as 3 and 4 here, and down for 5 for the 3rd, the 4th, and the 5th. So, you know, technically we can put, I'd need to change these blue to orange, but that could be the low there. So based on this here being a little bit tricky here, but based on this being the A wave here, the B wave up here, and the C wave down here for wave 2, that's it there. That's it. Maybe I could extend it down further. Could I do that? Could I look at all of that? That would push. No, that's all good, isn't it? 1, 2, 3. Can I look at that as another? No, that's it really. So basically a breach of this one here, and it would eliminate this particular count at this point. You could probably push it out a bit further, but I think that would be quite critical at this point. So a move past that, and then we need to, look at a more bearish picture to the downside. And if we were looking at this here as sort of a wave 2 up here or something of that nature and a wave 3 down here, then, we can expect this to have a rally here back to the, 38.2%, which is up here. So we could actually come up here but still come down again. I don't think that will be the case to go that high, but anyway, what I can see here is at minimum this length here we'll see over here for that, coming back to this wave 4 probably, and then coming down at that point. Anyway, there's no long trade here just yet. And I pulled all this apart as well. It's difficult to count this down here as wave 1 down here and wave 2 here. I mean, even as an A wave here, I'd have to count it as an A wave, a B wave, and a C wave here, because I've looked at this in a bit of detail. This section here, there's a couple of ways you could look at it. I mean, you've got 5 waves, 1, 2, 3, 4, 5 here in the first leg here. So you could call this down for 1 and back for 2. This is also 5 waves here. So this would be down for 1 here, back for 2 here, and then you end up with 3 here. So maybe you can get, 1, 2, 3, 4, 5 in here, maybe, So it doesn't count very nicely as an impulse wave. We can go over to this point. We could go 1, 2 here, 3 here, an A, B, C for the 4th here, and then 1, 2, 3, 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, 5th. So you can put wave 1 here and wave 2 here if you wanted to, but still doesn't sort of, this only gives you another 5 waves in here once you pull all this apart. So you'd have to go 1 and 2 and 1 and 2 here to get that. So it doesn't count very well labeling this wave 1 here. Labeling it as an A wave is helpful. Is about the only way to do it, because there's just no 3rd wave in amongst all of this. Anyway, I'll leave it all at that. I just wanted to point out that this is at a critical point. We can expect it to rally in line with stocks, but what we see with crude oil and US dollar terms, this is likely to come down further. I know there's gas issues and the fundamentals and all of that sort of thing, but I don't know how it all going to play out. But yeah, anyway, I just did a little bit more work on this today just to get my own head around it a bit. But I can't say to buy here. Do you know what I mean? To buy here, I would need to see this 1 and 2 here, which doesn't give me a very nice wave 2 by the by. So I'd need to see 3, 4, and 5, and then we would see the A wave, the B wave, and the C wave. Based on those 5 waves, we can buy the 50-60% retracement level back here. But unless we get that, we're not going to be doing anything, because it will just be more downside at this point. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.